Hello and welcome to Business Today. I am Siddharth Zarabi and with me today is the Managing Director and CEO of India's fourth largest private sector bank, Kotak Mahindra Bank. Ashok Vaswani is a global banker who spent most of his career overseas in the biggest multinational entities, has a career spanning several continents and expertise. Earlier this year, in January, in fact, just about a year ago, he took over at Kotak as the MD and CEO, and he is here with us today. Mr. Vaswani, thank you very much for your time with us today. I want to begin by sort of asking you about how's this 1 year been at what was and still today in some ways is the only bank where the name of the promoter, the surname, is also the name of the bank, and in some ways it has a unique place in our banking system.
Sure. So that first of all, very, very nice to be with you. Thank you. 1 year out, time flies, particularly when you're having fun. I got back to India after 35 years, and I always joke that it took 35 years of training for this job. But here I am, and this 1 year has been quite incredible. The India I left to the India I've come back, obviously very, very, very different, and we can talk about that. But Kotak is an incredible story. It's a great brand. It's an awesome platform. Kotak manufactures every single financial services product there is, and getting those products and services to our customers is a unique opportunity, and I think Kotak has done exceptionally well in the past, and I think it's poised for great things to come.
Since you spoke about 35 years of training, do you feel that those 35 years have trained you enough for India's complexities, India's opportunities, and India's challenges?
Look, the jury is out. Maybe we'll meet in a couple of years' time, and you'll tell me whether it has. But one of the things, Siddharth, which I think is really relevant to this, is that different markets, my various postings in different markets have given me the ability to go into a market and understand that market, right? So if you treat India as yet another new market, ability to actually take those and question, in a way that you get a better understanding of the market, I think has really helped me in good stead, even in this last 1 year. India is unique, like to some extent every market is unique, and India is in a stage of development, and you can compare that development to different markets, and therefore the learnings from those markets and bringing that thinking back is hopefully what I would bring to the table.
You took over a bank that has been very conservative. It's known for very, very sound practices. You've also taken over at a time when India's banking has gone through many changes. One is COVID as one cutoff, and before that, the NPA crisis, which sort of was with other banks mostly. How would you describe the state of Indian banking today?
So look, I think Indian banking has come a long way. I think the RBI has actually done quite a remarkable job of opening up the banking industry, opening up financial services actually. When I left India in 1987, I mean, frankly, it was at an extremely nascent stage. I was at the city, and being able to get a car loan in like 4 days or 5 days was considered a very, very big thing. But now things have changed so dramatically, and I think the RBI has guided this kind of process along and guided it remarkably well. And I'm sure there will be further change that will come because that's the way it kind of goes. And the good news is India has opened up, but India has opened up on its own terms and will continue to do so.
When it comes to consumer behavior, and you sort of alluded to that in terms of the ease with which people can access financial products and loans, I want to dive into one of the key concerns that exists right now, and that's where the regulator has taken some measures as well, the rise of unsecured credit. Now, from an industry perspective, how would you describe the situation? Is it a serious concern, or is it also partially a reflection of what's happening in the broader economy?
No, so that look, I think during when COVID hit, COVID of course was a black swan event. Nobody knew how COVID would really play out, and so when there's such a high degree of uncertainty, people typically will pull back, and like every other bank kind of pulled back, and then the governments injected tremendous amounts of liquidity into the system. And then the banks kind of realized, and this was not only in India, by the way, this happened, identical thing happened in the US, when the banks realized that, frankly, this is not going to be such a problem from a lending perspective, and waded back in quite aggressively. In wading back in quite aggressively, they went to the kind of customers who technically are the safest, the salaried kind of customers, and have given them lines pretty aggressively. So there was a bunch of, salaried customers who have got over leveraged, and there is a certain amount of over leverage in the system which will play out. Now again, I think the RBI caught it pretty early. I remember my first analyst call, I called it out saying, I'm a little worried about this. The RBI called it out a little after that, more broadly, obviously they knew, but called it out very broadly and publicly, saying that there is in the system, and they moved very quickly. And as you can see, unsecured retail growth has slowed down quite dramatically over the last 2-3 quarters.
And what is likely to happen in the forthcoming quarters?
So look, unsecured retail credit plays through the system. It usually builds up for 2 or 3 quarters and then tapers out over the next 2 or 3 quarters. My sense is that we are at the peak, at least at Kotak, I think we're at the peak, and then it kind of will taper off. And I think we'll come back to some level of normalcy 2 quarters down the road.
Okay, that's pretty comforting. And do you think that's going to be broadly in line with what the regulator has also sort of the expectations it has set for the industry?
So I don't have a full view, obviously. Obviously the regulator has a better view. But I'd be surprised if it would be hugely different from what we are seeing.
Okay. Let's continue on the economy sort of track. What sectors do you see fueling growth in 2025 and beyond? Where is the demand coming from in the economy, and what does that tell you in terms of the state of the economy?
See, Siddharth, one thing has become very, very clear. Government spending is a very critical element of this economy growing, right?
And if you ask the government, they do it, but they are perhaps not so happy. They want the private sector also.
They want the private sector to pick up. And the private sector, frankly, needs to pick up more if we're going to achieve the kind of goals that we want to achieve. But it will continue to be on the backs of government spending. And that's why you can see in the first 2 quarters of the year, because of the elections and then post-elections, things falling into place and momentum to build, government spending has kind of slowed down. And you're seeing the kind of slowdown in the economy. I'm sure as they hit their rhythm and their momentum, that's going to pick up quite strongly, and you'll see the economy pick up strongly as well. So government spending continues to be, for good and for bad, the main determinant of the growth of the Indian economy.
What about the private sector? We've had over the last 6 months several shades of opinion on this. Some say that there are green shoots, some say no, well, it's not enough, it's just replacement sort of investment that's happening. What's your own sense? Because the industry verticals and clients that your entire team works with would have good sense of what's happening on the ground.
So look, I think the private sector is also in pretty good shape, right? If you look at real estate, for example, I think real estate companies are in better financial condition than they've been in a very, very long period of time, right? If you look at pharmaceutical, if you look at tourism, they're all, in pretty good shape. And the valuations, of course, are kind of talking about that. And I'm sure they've kind of got growth plans, but I'm not seeing aggressive growth plans kind of come through as yet. And I think that if we're going to get to where we want to get as a nation, private sector expenditure has to go up.
And it's also because of the fact that we're still not at pre-COVID levels in some ways in terms of capacity utilization. But within these sectors, what personally excites you as a growth driver? You mentioned a few, but do you expect the real estate cycle to continue? Because there's also concern about very hot prices and only the luxury end of the market working, for example.
See, look, in a growing economy, I mean, I'm not making a prediction for a quarter or two is not what I'm not the best person for that. But in a growing economy, basic infrastructure, housing, transportation, pharmaceuticals, those, iron and steel, those are the kind of things that will definitely, the demand is going to be
Roti,
there.
kapda, makan thing?
That's bound to happen, right? Many more people wanting houses, many more people wanting vehicles and stuff like that. And that, I think we're going to continue to see. And I think you're going to continue to see growth in tier 2, tier 3 cities as well, right? Catch up and exceed, the rates that we're seeing in other kind of places. So it is a pretty robust economic kind of cycle that we're in.
Your bank is a full service bank. It's present in all product categories. You've been here a year. What sort of targets are you setting for your team in terms of achieving leadership within those product categories? Are you comfortable with the kind of performance you've had?
So look, I would say that this year has been kind of rocky. I don't think it's new news that we got an embargo from the RBI around the technology kind of thing, and that obviously has taken up a lot of my personal bandwidth, the management's personal bandwidth.
That's a subject that you know from your previous outings as well.
Yeah, sometimes I wish I didn't. It's taken up a lot of our time and stuff like that. But Siddharth, what I feel good about is, having really lived to this thing about let no crisis go to waste. We've taken this time to not only fix the technology issues and make sure that we get into a much better shape, but also taken the time to actually rethink and really bring the whole of Kotak under one narrative, one strategy, one kind of umbrella, so that when we get out and go out aggressively and we land things, and I think you'll see a lot of these landings happening in the next calendar year, you'll start seeing those things kind of come through. All the preparatory work that has been done in the last 6 to 9 months will start showing up in the marketplace then.
How would you describe the state of your tech stack, if I may use that word now?
So tremendous amounts of work has been done, tremendous amounts of work. But Siddharth, remember, the technology is the new arms race, right? Technology is moving so fast that there is no question of taking any breather or saying I'm done. This will continue to kind of evolve. But the basic things like resilience and cybersecurity and all of that kind of stuff, I think we've done a tremendous amounts of work to fix the basics, get it right, and kind of move ahead.
When 811 was launched, I remember I was reporting live on that launch, and it kind of set a certain level of expectations, and frankly I don't think it delivered on that. I don't know internally from a metrics point of view if it did, but is there a new 811 that Ashok Vaswani has in mind for India's tech savvy younger generation banking customers?
I'm so glad you asked that question. First things first, I don't know why you don't think it's delivered. I think 811 has been a fantastic business for us, right? 811 was acquiring, pre the technology embargo, about 600,000 accounts every single month, right? And just the sheer scale of acquisition, I think, and to do it at scale and get it done is amazing. Now, I think the fundamental thing that I wanted to drive when I got here is this notion of how do you put the customer at the center of everything that you do. So let's take 811. 811 was being marketed as a product, which is like a savings product, ability to make payments, do payments very, very efficiently, not have a minimum balance on the savings account, open in a digital account in less than 3 minutes and all of that.
And many of those things were absolutely
And
brilliant at that time.
I mean, the team delivered on all
Yeah,
of those. So to my mind, 811 was a tremendous success. But if you really think about 811 as an offering for core India, right? As an offering for core India, where the core Indian also has needs for insurance, needs for protection, needs for investment, needs for borrowing, and therefore you target 811 as our offering for the core Indian, right? That completely changes the game. And today, with we've launched a new 811 app. If you haven't tried it, you should try it. It's very, very good. And it really stitches these journeys together. So we're really saying that for this target customer, who is the core Indian customer, by the way, this is one place where you can get everything done really, really smoothly, seamlessly, and nicely, right? And from an economics point of view, obviously it's great because you acquire a customer and you're able to do much more with the customer rather than just one product. So I'm extremely excited about 811, and I can't wait for us to get released from the embargo, because then we'll get back to those levels of acquisition with 3 or 4 product engines attached to the plane.
Are you able to talk about when the possibility of that embargo being lifted is likely?
Siddharth, go ask the RBI. and when you find out, let me know.
No, but I'm sure there must be a process, right, of dialogue, constant dialogue.
Absolutely, absolutely. We are in constant touch with them. We are in constant touch with the team. And I must say they've been very helpful. They pointed out things, which didn't work. They've kind of even pointed out some of the things that we should do to help get over this. So it's been a very collaborative exercise. And we've been working. We've been systematically closing down all the gaps and things like that. And like I said, we've done a tremendous amount of work. Now, at what particular stage the RBI finally says, look, I think you kind of passed the threshold, that's hard for me to predict.
And it's fair, I must also sort of put on record here that it's not just Kotak Bank which has kind of had regulatory oversight over technology and related areas. It's other banks as well, and pretty large banks as well. And I think that's part of the sort of digitalization journey that our banking system.
See, look at it, Siddharth, look at it from this point of view, that India has a digital public infrastructure that no other country in the world has. Literally, no other country in the world has. So just take UPI as one example. Volumes are growing at about 80%. Now, whether you do a 10 rupee transaction, or you do a 1,000 rupee transaction, or you do a 1 lakh rupee transaction, every transaction goes and hits my core banking system, right? Those core banking systems which were, built 10 years ago, 20 years ago,
old stacks,
but even 10 years ago, they were not designed for this kind of thing.
Right.
And so the RBI is saying, look, if it is the decision of the country, right, which makes a lot of sense, that we are going to go and build out these kind of digital public infrastructures, you guys have to be able to deal with it. So it kind of makes sense, right?
So it's not as if they were the banks themselves were laggards. It's just that something else happened, and at a far faster pace than expected.
Who could have predicted the growth of UPI at this rate, right? I mean, it's incredible. It's absolutely incredible. It's very good. It's very good for the country. It's very good for the country. It's very good for the customer. And we just got to keep pace. And look, I mean, if you talk about everything that's happening in that digital public infrastructure space, it is mind-boggling the way, that thing is evolving.
Since you spoke about UPI, and that's a great example of scale, I want to come back to you and ask you that within your entire product portfolio, what is it that you personally would want to have, a similar scale journey?
So Siddharth, the way we talk about it, like I said, the key focus for me is customer, right? If I've learned one thing in my 35 years, it is get it right by the customer, everything else will follow, right? And I'm saying, so who is the customer that we are trying to go after? And for that customer, I want scale. And what is the proposition that I'm going to go after that customer? So where are we going to play? Within where we are going to play, where are the areas of disproportionate attention, and the SME, mid-market sectors on the corporate side are clearly attention areas. All across affluent, we have a fantastic private, absolutely top-rate private bank. How do we get into affluent, NR, and core? And we've got offerings against each one of those. It's really about polishing up those offerings, bringing all the products together to complement and make that offering really, really strong, and then go after it, right? And that's what really it's all about.
Your bank is known forever for risk management, but that also has, at least in the way I look at it from an outsider's perspective, also meant being conservative. But if you have scale ambitions, does the inorganic route also interest you?
Absolutely. I mean, look, we've done inorganic all along. We did ING, big one. We did Sonata. We just announced the acquisition of Standard Chartered's portfolio. So we look at every single inorganic opportunity there is, and we try and see, does it make a sense? Does it fit against our strategic considerations? And if it does that, does it meet our financial criteria? And both those are yes, we go.
Does IDBI Bank fit in?
Like I said, we look at every single thing. If it fits into the strategic considerations and the financial considerations, it'd be interesting. If it doesn't, it won't be interesting.
Have you had any interactions on that?
I personally have not, but look, Siddharth, we look at every single opportunity there is. So it's only natural we look at it.
A smart businessman would do that.
Absolutely.
Okay, on the fintech point of view, and this is not necessarily specific to Kotak, what's your sense about the fintech industry in India? And because there is growth and there are also challenges that we have seen. There is regulatory issues also. I just want to get your thoughts on the fintech sector.
So look, the fintech sector in India is thriving and it's doing really well, and it's very encouraging to see how well they've done. It's also encouraging to see that some of them have grown up and become, really, really serious companies of size and repute, whether it is in securities trading, wealth management, lending, a lot of that kind of thing. Look, the advantage of fintech brings is narrow focus, contemporary technology, go fast. The problem they have is how do you scale and how do you learn how to deal with the regulatory environment and stuff like that. We know what scale is. We know how to deal with the regulatory environment. We are obviously more broad-based. How do you bring that contemporary technology and kind of drive it, right? So I think there's room for both, right? And, there's no reason why we can't play that game. And there's no reason why we can't bring that technology to bear to us, to our customers. So I think it's exhilarating, right?
Would that therefore mean that you would do it all organically, or in that area also you would consider opportunities if they came to you?
I would happily consider opportunities if they came along, right? For me, for me, getting to scale is important. For me, getting it right by the customer is the most important. And so if there was a way, to typically get something that accelerates our plans, we would be very interested.
I want to pull out, go ahead, no, please complete it. I wanted to pull out a quote that I recall Mr. Uday Kotak saying, and that was incidentally at India Today, Business Today event itself. He said that from a nation of savers, India is sort of going towards being a nation of investors. And I want to link that to the deposit mobilization challenge that the banking system has seen, although last 2-3 months we have seen some reversal in that. How do you see that entire matter?
So look, I think Uday was absolutely right, as he usually is, a very smart man. Just look at the way money is flowing into mutual funds through a SIP program every single month. It's stunning numbers, 21,000 crores, 23,000 crores, 24,000 crores. That's of course gross. There are redemptions as well.
Plus, in fact,
but
there are break-offs as well at a very high rate.
Exactly, but still a lot of money flowing into that, right? Obviously, the Indian consumer is actually financially more savvy than the American consumer or the UK consumer. and understands.
And you are saying this as a global banker who is
Yes,
so
yes, I've seen that. I'm telling you, the average Indian consumer is far more financially savvy.
Oh, why is that? Sorry, I'm interrupting your chain of thought, but I'm very curious. Is it like
No,
that
it's just been
Dhando
brought up.
mindset that we talk about in the markets?
The average American consumer or the average UK consumer is not that financially savvy. The Indian, it's in our blood, it's in our DNA. You know, we are taught very early, you know, how important money is and how you should be savvy about money. That's just the way we all have been brought up, right? That's not necessarily the way you're brought up in the US or the UK. So the average UK-US consumer is definitely not financially savvy, and you can get away with a lot of other stuff in the UK-US which you would never be able to get away with in India. The Indian consumer would, you know, hold you out for that. So therefore, the Indian consumer is saying, look, I want a better return on my money, and mutual funds and the stock market is giving me that, right? So it's not surprising. Now, having said that, deposits is usually a function of economic activity. And as long as there are heightened levels of economic activity, deposit levels continue. So even in a market like the US, where, you know, 61% of the people would have some kind of mutual funds or whatever compared to 6 here, if you take, let's say, checking accounts, which is what we call current accounts, the level as a percentage of GDP has continued to be high. There will be a quarter when there will be some tightness, there will be some quarters when there will be less tightness, but generally speaking, deposits grow in line with GDP, right? So that, I think, will kind of continue.
Since I'm talking to India's fourth largest private sector bank, I also want to hear your thoughts for our viewers on a demand that's in fact even been raised by the Indian Banks Association earlier, which is to somehow incentivize from perhaps a tax treatment purpose fixed deposits. Do you buy into that?
Yeah. What I buy into is a level playing field. Explain. Right? So if you're going to give a tax advantage to either mutual funds, debt mutual funds or equity mutual funds, and not give it to time deposits, then you're not creating an even playing field. If you create an even playing field and say, okay, I'm going to get the same tax benefit if I put it into a debt fund versus if I keep it in a fixed deposit, then it's kind of clean, right? If there's a tax disadvantage, right, that's not a good place to be.
What could our policymakers learn from global experience in this regard? Because I'm sure this issue might have come up in other economies. What can you tell us?
So I'm trying to recollect. I think both in the UK and in the US, there is no, to the best of my knowledge, there is no tax differentiation between debt mutual funds and fixed deposits. Both are treated as
on par.
On par, right? Of course, the capital gains you get a better rate, which is true in India as well. So I think in that context, there's a level playing field there, while that may not be the case here.
Okay, as we wind down this conversation, there are many more questions, but in the interest of time, I just want to get a couple of things. You spoke about both, but just to re-emphasize on that. Our banking system has gone through various cycles, and, you know, phone banking, which is actually a good thing, should mean customer ease, but also was a bad word for quite some time. The overall system and its health has improved, and nobody can have an argument against what has been done in the last 10 years. Yet, as we look ahead, do you see any potential risk or stress emerging that we should all be cognizant about?
See, Siddharth, this is something that you've got to be constantly vigilant of. Okay? Generally speaking, if you look at, let's say, global events, right? 1991, Latin American crisis. 1997, it was I think a real estate kind of crisis.
Currency crisis.
Currency crisis in Asia. 2001, dot-com. 2008, global financial crisis. Okay, so I mean, look, every 7 or 8 years, there is something that kind of affects. Now the good news is India, for the most part, has kind of kept itself insulated from these global events, right? But then we've had our own share of, NBFC crisis, this crisis, that crisis, right? So you can't put these things on autopilot and say everything is flying, smooth. This has to be constantly monitored, constantly kind of looked at, constantly tweaked, and see how things kind of evolve over a period of time. You can't get complacent about this.
As a global banker, therefore, what would you say to that very small set of voices that sometimes say that perhaps there's a case in India for a lesser regulation and more freedom to private enterprises, including in the financial sector, to perform, given the context of what you said, basically eternal vigilance is the price we will pay for a stable financial system?
Every industry gets the kind of regulation it deserves. Right, I go back to the US. Wherever there's some kind of extreme regulations kind of come in, and the kind of mindset I try and put into my team is that, look, what is the regulator really trying to do? Essentially, the regulator is saying get it right by the customer, and shame on us if we need somebody externally to tell us to get it right by the customer. Right, we should be getting it right by the customer. Right, and we get it right by the customer, everything else kind of falls into place. Right. And so there will be times when, things get heavy-handed, even-handed, some crisis will come, we'll react in a certain way, So this is a constant kind of changing environment which you have to deal with.
Okay, as we wind down this conversation, I'm going to ask you, what will brand Kotak stand for in the future?
So Siddharth, again, very good question, and something that we kind of play. I really believe that the big defining thing about India today is that the aspiration people have, and I'm not talking about only the rich kind of people who are aspiring to get, into the mega millions, but even an ordinary person today has got aspirations which are far greater than they were like 20 or 30 years ago. India is a land for aspirational Indians. And we want to be the go-to financial services organization for aspirational Indians, right? Fueling their aspirations, partnering them with their aspirations, giving them the hostla to go ahead with their aspirations.
Would a rate cut help fulfill those aspirations, given the cost of money for this class that you're talking about?
Look, I think rate cut will affect economics on different kind of products in different kind of ways, right? So I don't think rate cut, I don't know how to kind of directly correlate.
If you were a member of the MPC, hypothetical question for the record, you are a serving banker, so not to sort of put you in hot water. If you were a member of the MPC and you had to vote, what would you vote for today?
It's difficult, Siddharth. I don't have all the data that they have.
Okay. That's a smart banker.
But I have a lot of faith in the way the process works, right? Inflation is running high, and one way of controlling it is interest rates. So holding out and seeing what happens makes sense. Obviously, you've got to balance economic growth, and that's what really.
But if you were to carve out food inflation, food price inflation,
even then inflation is running a little high, right? And you want to, look, eventually you'll have to kind of balance it out, right? Economic growth versus inflation, and then see what happens on government spending, which is such a critical element of this whole thing, right?
And we'll get to know that in just about 2 months from now as the next budget comes up. Mr. Vaswani, there is so much more to talk about, and perhaps if my luck had held out, I would have got a headline on interest rates from you, but you've been very cautious, but that's understandable. Mr. Vaswani, thank you very much for your time with us today. That was one of India's reticent but very, very solid banks, and the boss of that bank talking to us at a time when we are looking towards 2025 and what the Indian economy needs to continue to grow at a much faster clip. If you've been, thank you very much for watching.